Yeah, well, I agree with you. My issue with the macroeconomists and the financiers is sometimes they sugarcoat everything because they're thinking I have to describe it in such a way that somebody else that's less committed, that's less insightful than me, will agree with a small portion of my argument, so they'll give me money. And you keep dumbing it down through 3 or 4 or 5 layers, and then there's nothing left. Like, for example, what is Bitcoin to me? It's like fire. It's going to change the civilization. What is Bitcoin to you? Well, it's an uncorrelated asset, and if you put 2% of your portfolio in an uncorrelated asset, you'll have less volatility. And let's backtest this for a decade and see whether or not this might be an uncorrelated volatility reducing thing. And I think, man, that's such a, it's like, so what is the word?
So
like
narrow.
Bitcoin deserves better than that. But also, I give you fire, and you can conquer the world, change the civilization, reroute the course of human history. And you want to call that an uncorrelated asset?
Yeah,
like it's
exactly.
It's a 1%, a 2%. We want people to do a 1% allocation to an uncorrelated asset. And I'm seeing aqueducts and roads and airplanes. And I think, in their defense would be like, we have to talk to the investment advisors in language they understand. But I would disagree. I think it underestimates the strength of human intellect. I think that if you explain to them that this is an engineering breakthrough, and the first time in human history, we have a monetary network that will store and channel energy without power loss. It's like a railroad. It's like mass transit. It's something extraordinary that's going to be an underpinning of civilization. There were investors that invested in Standard Oil, and there were investors that invested in U.S. Steel. In fact, the greatest of financial investors is J.P. Morgan, and he's the guy that actually put together the merger that created U.S. Steel, when he merged Carnegie's interest with the other steel interest. It's like they got it. And I think that investors will get this too. I don't think you got to dumb it down and say something like it's an uncorrelated asset to decrease the volatility in your investment portfolio. Well, I think everybody resonates with a different set of metaphors, and it also depends on their context. So, for example, if you're meeting with pure institutional investors in a formal institutional context, then there's 6 people watching in a big room, or 6 or 12 or 16 people, then you would use that very formal language of whatever uncorrelated, synthetic safe haven asset. You could use that. But on the other hand, what I found in life is you have a very different conversation with 8 people on the team when their boss is there and when the 8 people are sitting next to each other than when you have a one-on-one conversation with them. And the conversation, if the conversation is a formal meeting with a hierarchical set of supervisors, it has to be very constrained. If the conversation was a one-on-one meeting in a business setting between 9 and 5, it would be about here. And if the conversation was a one-on-one meeting outside of business, like, I want to have a heart-to-heart with you, John. It's like, let's go out to dinner. And we have dinner. And of course, that would be a different thing than if I stood up in front of 50 people at church on a Sunday. So you almost have 4 different venues, right? The sermon, the social, the one-on-one professional, and then the formal business meeting. And the metaphors and the semantics you're allowed to use are different. And by the same person sitting in the one formal meeting that would always go to the antiseptic sterile metaphor, if you caught them one-on-one off-site, right, they might open up to you and they would have the more spiritual discussion. And sometimes they feel like, well, I can't in front of my boss or my peers. And sometimes they feel like, well, it wouldn't be polite, right? Or it wouldn't be appropriately professional. So even if they believe it, they won't always share it. Can I tell you one really funny story I had in this regard? You know, when we bought Bitcoin corporately, the most challenging environment, a publicly traded company is going to buy Bitcoin on behalf of other public shareholders, right? So everybody's walking on eggshells. What will the shareholders think? And we went to great lengths to treat the shareholders very transparently and respectfully. To the extent that we tendered to buy $250 million worth of our own stock at a premium, so as to give everybody an option to either to opt into MicroStrategy with Bitcoin, or to exit at a profit if they didn't like the idea. That's how, when you spend $250 million, in order to cushion the message, it's a lot of commitment, right? But having said that, so we announced the tender offer, and then my finance people said, I said, well, how do the shareholders think about this? They said, well, they're all generally pretty okay with it, but there's this one shareholder, this one investor doesn't like it. And I said, so, and I'm going to meet with them today, right? They're like, yeah, we've lined up a bunch of meetings, so get ready for this one, because this guy really doesn't like Bitcoin at all, and you should just get ready for that. So I'm like, okay, suit up, go into battle. And the meeting starts, and we start talking, and I said, yeah, and so we purchased Bitcoin because we have this macroeconomic view, and we view Bitcoin as a great way to preserve the purchasing power and the treasury of the company. And our alternative is to decapitalize the company completely and give all the money back to the shareholders, but then we won't have any capital. And the guy's like, yeah, and then he goes, so tell me more about this, and he said, tell me more about this. I said, well, let me tell you about Bitcoin. I said, Bitcoin, is a decentralized, crypto application on a proof of work network.
Said, I don't need to know all that. I know all that shit already, right?
And he literally cuts me off, and he goes, oh, I already know that I own Bitcoin. Right. And so here's the point. Secretly, privately, he agrees with you. He agrees with me. He's already got it. In his role as a public representative of his investment company, he had to push back.
Yeah.
And so sometimes the same person that believes one thing privately, and by the way, he had to push back reflexively, but then when we had a one-on-one, he's like, I get it. No problem. I'm like, and they're like, well, how did it go? I'm like, oh, it's fine. It's fine. He owns it. Yeah. So, by the way, and then in my private meeting with my investment advisors, they're telling me you got to be concerned, but this is a big problem. And you can imagine the ripple, which is like, by the time you go through 7 layers, it's like, oh, there's going to be a big problem if you do this. This is that you got to do this. You can imagine why people act so constrained and conservative in their views when they're being filtered through layers. But if you manage to build a communication channel directly, one-on-one, you'll actually generally be pleasantly surprised at the insight of humanity.